All right, so the Nigerian Senate is still hanging the Central Bank and the Monetary Policy Committee. The upper house of legislative is still refusing to clear and screen and approve or deny the nominations of President Muhammadu Buhari's or the executive branch to become deputy governors of the central bank. So yesterday, the president sent the name of the second individual who is currently, of course, who's been in the central bank for 25 years, Adamu Edward, to become a deputy governor and join the board of governors of the financial regulator. The Senate is also still holding the nomination of Aisha Ahmad, who also was nominated last year by the president in October, first week in October last year, who has also remained outside the CBN. Now, there's the fourth month in which Aisha's nomination by the president is pending, and the Senate continued to refuse to clear and screen those individuals. Let's get back to the marketplace. Christian Orajekwe is here to take us through the Control Capital's playbook for 2018. And they just put a title, Look Beneath the Surface. So I got a few questions for him. What lies beneath the surface of the Nigerian state of economy? And if there's anything in there below the surface for the markets. Christian, it's good to have you here.
Thank you.
Thanks for coming. Why do you guys think this should be look beneath the surface? First, what's on the surface? And this is the surface. Yeah. What do we have on the surface?
What we have on the surface is the euphoria of a resurgent global economy and then Nigeria's economy exiting recession in 2017 and then expectation of a much stronger growth in 2018. So that's exactly what we can see beneath that's what we can see at the surface at the moment.
Does the surface look encouraging? Does it look is it looking improving?
Exactly, it looks very improving. If you relate what to expect in 2018 to 2017, the real experience in 2017 and then 2016, you will agree with me that 2018 appears to be a more optimistic year. I think the market, for instance, has pretty much, what the stock exchange is like is a little indicator of what should be, what the investing community thinks of their perception of the economy. So how the market started this year is a clear example of how optimistic investors are, vis-a-vis the economy 2018.
Hold on a second. Let's take that again. Let's rewind what you just said. Exactly. The stock market is a leading indicator of investors' perception of where the economy is going.
Exactly. And if you take, for instance, the U.S. market as well, why have we seen a very strong rally in the U.S. market since 2016, November down to date? Is because of investors already anticipating the impact of the stimulus programs on the economy vis-a-vis the comments and the government expected stimulus plans for the economy. So, it's a global phenomenon. When investors expect that, the economy is going to be favorable for investments, you don't have to wait till you start seeing the results of those things. So you act in anticipation of those favorable conditions.
So if I'm going to look at where the economy is going, I'll just look on Broad Street.
It's major. Because once the economy performs very well, it means that all the companies that are quoted that have investments in the economy as well, you expect to see multiplier impacts on their earnings. So investors actually pretty much buy earnings.
The earnings are coming in.
Exactly.
They're coming in trickles. And this week we've seen a few. Since the end of the last 6 years. Flour mills came in, Guinness Nigeria. These are some of the bellwethers. Honeywell, a mid-cap, of course, in the consumer goods space. And, of course, we had a 7-Up as well. Yes. Do you think these numbers are beginning to show that, hold on a second, these are folks in the real economy, in the real manufacturing. They're not trading.
True. Yeah, true. If you look at flour mills results, for instance, very impressive third quarter number, a lot above expectation. About 3.9 billion was reported, and that's even tripled my estimate. For instance, that speaks to the resilience. How much the economy has recovered. Sales, yes, wasn't so strong because of seasonality impact. But if you look at some of the challenges that the company had contended with in the past, for instance, FX was more stable, and we saw how that impacted on margin. In fact, the margin that they reported in fourth quarter was at a record high. That was quite impressive. Operating expenses as well, because of the inflationary environment, was also pretty much well contained. Guinness, for instance, as well, recorded about 2 billion naira profit in the third quarter from a loss position, a similar period of last year, and then from just a very tiny 40 million in the first quarter. So these numbers, and you can see that immediately those numbers were announced, and there was a very simultaneous reaction to the stock prices of this company. So yeah, I think the numbers are beginning to reflect the realities of the economy.
We just spoke to about two of the companies. One produces what we eat, the other produces what some folks drink, what some folks don't drink, but at least depending on whatever. But so this speaks to what you call consumer spending and things like that, isn't it?
True. Yeah, and like the last conversation I had here with you as well is once prices are pretty much predictable, it helps. It has a way of impacting in consumption expenditure, and also because when you also look at the employment environment, you look at government's plan stimulus program. Consumers pretty much bet on if I'm sure that my job is going to be stable over the next 4 or 5 months, I'm more willing to spend now. There's less incentive for me to want to save money because of uncertainty. When there's some certainty.
So where there's certainty,
exactly.
Folks tend to spend more. That's if you're sure your job is there.
Prices are stable. So because one of the reasons why when you are restricted in terms of your spending is when you know that prices are. You can't predict the pace at which prices are moving. So in fact, as a matter of fact, when prices are even going up, your purchasing power is significantly even impaired in such conditions. So you have to prioritize your spending to items that are very essential. So discretionary spending is usually pretty much affected in period of rising inflation. So what we've seen now is some sort of discretionary spending improving, as a result of less inflation and also as a result of the stability in the macro environment.
So Nigerians are taking the very gentle, what you call technical economic recovery of 2017 to the marketplace, to the shops, to the store, to the street, wherever to the farm.
True.
That's what it means.
True. And it also speaks to the resilience of the average Nigerian consumer as well. I try to compare what we've experienced so far between 2016 to date to what typically will have been the experience in economies that are not as resilient as our economy. Yes, there have been cases of rising unemployment, cases of people's savings being eroded by the inflation challenges that we suffered. But hey, I speak to people that most consumer goods companies that you talk to, on average, raise the prices of their products by between 40–50%, on average. And then you ask them how much of, volume contraction have you experienced. So we see volume contraction in single digits. Meanwhile, prices have gone up in double digits. So what does that tell you? It actually speaks to the resilience of Nigerian environment, of Nigerian consumer. It also speaks to the innovative ideas of some of these consumer companies, because what they also tend to do is, in a very challenging economic conditions, they also try to rework their sales strategy to suit that particular environment. So you see a lot of effort goes into innovation. The likes of Nestle, the likes of Unilever, they begin to produce items in smaller packages so that when you are consuming, it's less painful for you, to consume. As if you were buying, say, a big pack of Omo, for instance, the guy mixes in a sachet for you, so you can afford that 50 naira. You can buy, so when you
keep coming back,
exactly,
and buy more. True. And then the volume grows.
They're able to maintain a reasonable level of
So when you talk of affordability, but again, let's look below. Let's look beneath the surface. Give us an overview of this report.
Exactly. So what we have done in 2018, quite different from what we've done in previous years, is that the experience of 2014 is still very fresh in our mind. And it's
what happened in 2014?
Exactly. The economy started very well. Oil price was well above $100 per barrel level. The stock markets started the year on a very impressive note after, a impressive 2013. So there was this euphoria, just as we are currently experiencing. Then somewhere down the line, towards the end of the third quarter, of 2014, there was an unexpected reversal in the price of crude oil, started crashing. In fact, it dropped so fast, and then the shock, the Nigerian investor was not prepared. Government didn't seem prepared as well. So it was an unexpected shock. At the time, Central Bank was even forced. It was a 3-month period, and Central Bank was forced to even initiate the devaluation of the naira. Stock market ended up closing negative, having returned. Having delivered positive return, in the first 6 months of the year. Yes. So what we are saying in 2018, yes, it looks rosy. Prices, crude oil is going up. prospect of government revenue getting stronger is there. Naira stability, Naira expected to remain stable, and even, I mean, in some cases, more likely to even appreciate over the dollar. The stock market ended 2017 with a very impressive note. Expectation is that there's going to be sustained rally in 2018. But what we're saying is, hey, we buy this expectation, we like this, but we also think that an average investor to also prepare for the worst case scenario.